Today's lesson will be going over support and resistance and how to efficiently utilize support and resistance with your trading. Now, the way I'm going to teach this is exactly how I would have wanted it to be taught to me when I was first introduced to trading. Now, support and resistance are an important form of technical analysis that support your bias in finding entry and exit points. Also, they are an important instrument to utilize with other instruments such as the Fibonacci or moving averages. Now, what is support and resistance? Support and resistance are key price levels where the market changes directions frequently. Now, what makes a support level and what makes a resistance level? Because support is separate and resistance is separate. As for support, it's a market that's continuously falling and then bounces off a price level. That price level would act as a support for a period of time. And as you can see from the right-hand side example over here, we've had the market drop until it came in contact with a support level, which is a price, and then it bounced off it numerous times. As for resistance, a market that's continuously rising and then bounces off a price level, that price level would act as a resistance for a period of time. And again, from the example on the right hand side, we can see how this market kept going up until it came across a resistance level, which is a price, and then it bounced off it numerous times. Now, what time frame do we find support and resistance in? Support and resistance are found across all time frames from the 1 minute chart all the way up to the yearly charts. Support and resistance can last for a short-term period or a long-term period. If the market breaks below support, there's a very high chance the support price level can become a reference for a future resistance. If the market breaks above resistance, there's a very high chance the resistance price can become a reference for a future support. Support and resistance are both commonly connected. They are connected because when a support is broken, it tends to become a resistance level. And when a resistance is broken, it tends to become a support level. As for support price levels, a bearish market will come in contact with support oftenly, but not always will the support levels hold. Sometimes they are broken out of, and if they are, then they become a resistance level in the future. Now, you can see from this example over here on the chart, on the left hand side, I've got a support level, and it's a support level because I've got the market bouncing off this price level over here numerous times. We can see we've got 1 touch, 2 touch, 3 touches, 4 touches, 5 touches at this price region over here where the market has bounced off it numerous times until it finally broke below that support level, and it broke below it quite strongly, only for the market to retest it on the right hand side as a resistance price level. And we can see it bounced off that resistance price level, which is the exact region for that support level 1, 2, 3, 4 times before the market finally decided to keep dropping. As for resistance price levels, a bullish market will come in contact with resistance quite oftenly, but not always will the resistance levels hold. Sometimes they are broken out of, and if they are, then they become a support level in the future. And as you can see from the example over here on the left hand side, we've got a resistance where we've had 1, 2, 3 touches at that resistance price region, and then for the market to finally break above that resistance price level, only to retest it as a support on the right hand side. Now, to conclude some stuff about support and resistance can exist at any given time in the markets. Support levels are created in bearish markets. Resistance levels are created in bullish markets. Support and resistance levels are not a single price, but a price region. And this one here is important. In a bearish market, when support price levels are broken, they tend to become resistance. In a bullish market, when resistance price levels are broken, they tend to become support. And why do we want to learn about support and resistance? Because support and resistance support your bias by giving you a take profit of a region for a potential market entry. Okay, so we've got pound dollar here, and I'm on the 4 hourly time frame, and we've got a clear uptrending market, a market that's moving up. And we said when a market moves up, it comes across mainly resistance price levels, as that's where resistance price levels are created. So the very first thing we want to do is highlight those resistance price levels. As you can see, we've got a resistance here. We've got a resistance over here as well. And we've got a resistance currently where the market is hovering. It's bouncing off this current resistance price level over here. Now, we've said that when the market breaks these resistance levels, they tend to become support price levels. So let's highlight these resistance levels over here. And as you can see, these resistance levels have not been retested as a support level. So I can conclude a bias that I still need the market to retest these regions over here, perhaps either one of them, before it decides to continue moving up. Now I can see that I've also got a support level over here, and we've got the market currently in a consolidation, bouncing between resistance and support. But I can come up with a bias for this particular trade just based on support and resistance level. Now if we highlight the support level, and as I'm still expecting a retest back to these previous resistance levels, which I expect them to act as a support level over here on the right hand side, what I can expect is perhaps a break below the support level, and I would want the market to break below these prices over here before I do see a retest back to this support level, only for it to act as a resistance in this region and perhaps a continuation to the downside over here. But knowing that this here is my previous resistance, which I would expect to turn into support, I would take my profit over here. This is where my TP would be. Now if the market does decide to continue to go down from this price here, then my next region to perhaps seek a buying opportunity would be at this support level, which was a previous resistance, and perhaps we can have another break below it, retest, and a continuation. But if this pattern does not occur and we do have a bounce off, then we would seek to buy this market over here based on what certain patterns we've got at this region. Now this is the most efficient way to actually utilize your support and resistance. You can see how simple it is, how easy it is to use. Now my advice is for you to actually backtest this specific method. Go ahead, open up any chart, find a trend, locate your support and resistance levels, mark them as a reference point, and see what occurs with them in the future. Now I hope this video was useful. My name is Abdul Light. Don't forget to like and subscribe this video, and thank you for watching.